Elizabeth Warren wants to tax money that you've never seen. The value of your house, your 401k, your business. Money you haven't sold, haven't cashed out, haven't seen a dollar of. And she wants 2 to 6% of it every year. Yesterday, Elizabeth Warren officially proposed her wealth tax with the backing of over 50 other members of Congress. She's proposing a 2% tax on all net worth over 50 million, jumping to 6% tax on everything over 1 billion. I get that to many, this makes sense. Why not tax the ultra rich? The problem is the tax isn't on what they earn, it's on their net worth. Stocks, homes, real estate, art, cars, all that stuff. To illustrate the problem, imagine they drop the limit to 500,000. You've got a house worth 400, a 401k at 200, a car worth 20. That's 620,000 total net worth, even before your bank accounts get added in. You'd be 120 over the limit, owe 2% on that, 2,400 a year on money you never saw in your pocket, piled right on top of your regular income taxes. So hopefully you can see how disastrous a wealth tax would be for the average American. Now, obviously, Warren's plan isn't aimed at you. But what about the ultra rich that it is aimed at? It's still disastrous for them and for the rest of the nation, especially the people they employ. Let's look at some scenarios. Take a founder of a company who owns $2 billion worth of stock in the company that he built. Let's say that they pay themselves a salary of $500,000 a year. Under Warren's plan, everything over $50 million gets hit with a 2% tax. Everything over $1 billion is 6% tax. That would equal a $79 million tax bill every year. But he only has $500,000 in his account each year. So then what? He has to sell off shares of his own company piece by piece just to raise enough cash to pay the tax. And he gets taxed on the gains of each share that he sells. So he's selling the shares of the company that he built to pay a wealth tax while paying a capital gains tax on the shares that he's selling. Over a decade, his ownership would shrink dramatically. He'd lose control, outside investors and activists would gain power, and suddenly he, the man who actually understands the business, is just a minority shareholder looking in from the outside. Now let's take a family business. Let's say it's a regional manufacturing company. The company is worth $200 million on paper, but most of that is wrapped up in machinery, buildings, and inventory. Yearly profits max out at $10 million on a good year. Warren's plan would tax the $10 million as income for the business. Whatever salary the family takes would be taxed as their personal income, and then they would have to pay a wealth tax on the value of the company, which, in her proposal, would cost $3 million. Each year, $3 million extra dollars of wealth tax. To be able to pay that every year, they'd have to cut workers, stop buying new equipment, which would then likely lead to them losing their competitive edge, and then sell chunks of the company to outside investors. Eventually, the family would lose control, or they'd be forced to sell 100% of the company to a massive national or international corporation. Either way, the local jobs and stability for their employees would get worse. The point is, once you force major shareholders to keep selling shares to pay the tax, ownership drips away year after year. That means more shares hit the market annually, making hostile takeovers way easier, and leadership gets weaker too. Because the founders who actually built the company and know it inside and out lose their controlling say. What that ultimately leads to is fewer jobs, less investment, and less innovation in America. Because wealthy people aren't dumb. They won't stick around and let you skim 2 to 6% off their net worth each year. They would move. They'd move their money, their businesses, and themselves somewhere else. Just look at Europe for proof of that. Many European countries have tried wealth taxes at some point in their history, and nearly all of them have already ditched them. France, Sweden, Austria, Denmark, Germany, Netherlands, Luxembourg, Finland, Iceland, Ireland, Italy, all tried, all gone. In France, roughly 42,000 millionaires moved out of the country, drying up the tax base that they thought they would have. Sweden saw the same issue. Even IKEA's founder moved out. In Austria, they discovered that the enforcement cost for valuing assets, like expensive art, made it nearly impossible to find the true net worth of somebody. Every country had these same issues, and the 3 countries that still have wealth taxes continue to have problems. Norway saw over 30 millionaires leave in 2022 alone. In Switzerland, when they raised their wealth tax by 0.1 percentage points, their wealth base drops by 3.5% through people leaving, tax evasion, and less investment in appreciating assets. In Spain, people are dumping mass amounts of money into exempt assets such as life insurance policies, which causes the expected taxable base to shrink. Everywhere a wealth tax has been tried, it has either been repealed or the country is facing major problems because of it. It would be no different here. Whether intentional or not, Elizabeth Warren's proposal would dismantle the conditions that made American prosperity possible. We didn't become the global economic superpower because of our liberal social policies or our constitutional system, and not even because of our vast resources. We became prosperous because we allowed businesses to flourish. We had a small regulatory state, a relatively low tax burden, and a national vision that encouraged people to chase their dreams. What Warren's plan does is undo all of that. Increase government control as they value every asset you own, tax money that you haven't seen enter your pocket, and kill any incentive to build your dream business. Because if you're successful, the wealth tax will just force you to sell it anyways. Subscribe and like the video for more. I'm trying to build a brand based on honest, reasonable takes and not the performative outrage you get from so many on both sides of the political aisle. If that resonates with you, subscribe for more and head to my Substack to get new releases emailed directly to you. With that, I'll see you next time. Thank you.